Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, U.S. stocks bouncing off session lows. Futures slightly higher after a sharp tech sell-off that wiped about $500 billion in market value from chip stocks in the SOX index as investors grow more cautious about lofty valuations. Crypto is also taking a hit. Bitcoin dropping below $100,000 per token for the first time since June. The sell-off has somewhat eased, but it's still down more than 20% from a record high reached just a month ago. Plus, AMD shares falling after the chip company reported earnings. The company did beat third quarter estimates and raised its revenue guidance for Q4, but even that wasn't enough to satisfy Wall Street's lofty expectations. Investors have been piling into AMD as of late, following blockbuster deals with OpenAI and Oracle. And a fresh read on the U.S. labor market. ADP's latest private payrolls report out this morning showed the economy added 42,000 jobs last month. September's figure was also revised higher, now showing 29,000 jobs lost instead of the 32,000 initially reported. Let's get a quick check on stock futures, as we were saying, bouncing off of the lows that we saw early this morning, indicating a modest open in the green, it seems, throughout all three of the major indexes. This, of course, comes after that brutal tech sell-off that we saw on Tuesday. It continued into early this morning, but we are seeing somewhat of a rebound there, but mostly flat to the upside. But let's dig into our top stories of the day. Chip stocks falling after earnings, plus McDonald's seeing strong sales growth, and Bitcoin also ticking a bit higher after falling below 100,000 for the first time in months. Joining me now to discuss this, tech editor Dan Howley, along with senior reporters Brooke DePalma and Ines Ferre. And Dan, I want to start with you on AMD because we are still seeing shares fall this morning. Yeah, the company did report pretty strong results. So what's Wall Street's reaction been to this latest sell-off, and how does this really explain what's going on across the tech industry?
Yeah, I mean, look, AMD beat on the top and bottom line. They beat on data center revenue. They beat on client revenue. They beat on gaming revenue. So they beat across the board. They even beat on fourth quarter guidance. But the big deal here is it just wasn't enough. I think that Wall Street had lofty expectations already. The stock prices already soared far higher than a lot of people, I think, expected. And then when they came in with the results this quarter, it just didn't make people as excited as they wanted to be. It's kind of that, beat and raise. Okay, well, beat and raise even better than you did last time. And so that's probably what's going on here. It seems as though the company's going to continue to do well when it comes to the AI race. Don't forget the deals that they announced with OpenAI and Oracle, those don't hit the books until later. That's with their next generation GPUs. And so then we'll start to see from that. But perhaps people were expecting that revenue to hit now. I don't see why they would, because the deals were only just announced last month. And so it wouldn't necessarily be on this quarter guidance or the prior quarter guidance. So, when you look at a stock like this, you think of kind of what's happened to NVIDIA in the past, not obviously saying that AMD and NVIDIA are comparable as far as market cap or, total market share. But it's the idea that, okay, well, you've scored these huge deals, you've performed well, perform better for me, and then we'll talk.
Right, really high expectations there. I also want to bring up Supermicro. Now, shares are down around 8%. This is a company that did miss on earnings. So what do we know from that report?
Yeah, missed on earnings, and that's after the company had lowered guidance for the quarter. And so this is the company, Supermicro. They produce the server racks and things of that nature using NVIDIA chips. It's just a company that says that they're expecting to see more revenue down the line as they continue to change designs for their products. And so that's what we're seeing here. And I think, when you look at a company like this where they're selling these huge pieces of hardware, a lot of people are likely expecting them to just be blowing up. You see these data centers going up, not just in the US, but around the world. How come they're not doing as well as they anticipate? And so I think that's where you're seeing the stock action come from investors right now. We just have to see what happens now moving forward. They've missed a few times on expectations in the past, and so this is just another example of that. At some point, they're going to have to pass expectations, or at least meet them. And so I think this is a company that, as they continue to build out the servers that go with this infrastructure, at a certain point, they have to deliver.
And Brooke, outside of tech, many consumer names reporting McDonald's, Cava, but let's start with Mickey D's. They brought back the snack wrap, which is a personal fave of mine, but we also keep hearing about more warnings on the state of the U.S. consumer. So what's the update on that front?
Allie, shares are popping just a bit in pre-market trading as this call is currently underway. And what we heard was that snack wrap, well, it did really well in the quarter. U.S. same-store sales grew yet again for the second quarter in a row. And that was largely due to the return of the snack wrap. It was returned to the menu for the first time since 2016 at a key price point of $3.99. And on the call, they did say that that was the most popular new chicken launch product in recent history. In addition to that, they also had these value menus that they worked with franchisees in order to launch around a $5 and $8 price point. That really worked well for them. Those are called extra value meals. And lastly, global same-store sales, well, they also grew in line with Wall Street's expectations. And on this call, we're getting some key notes, some color about the U.S. consumer in particular that really emphasizes yet again this K-shaped economy, this bifurcated consumer that we're seeing. CEO Chris Kempczinski said on the call that lower income consumers declined nearly double digits in the third quarter. Yet, higher income consumers remain strong, increasing nearly double digits in the quarter. And he went on to say that he expects these pressures to continue into 2026, but certainly McDonald's doing everything it can to really capitalize on this environment where consumers are doubling down on value.
Doubling down on value, that lifting up the same-store sales. Cava also saw its same-store sales rise, but they also continue to warn about the younger consumer under pressure. It's similar to what we heard from Chipotle. So why is this all happening now at a time when you would think these fast casual chains would be performing well?
Yeah, these fast casual chains in general, think about what just happened with Chipotle. They're not performing as well as they did back in 2024. Now, Cava did see same-store sales increase about 1.9%, but that is nowhere near the tremendous same-store sales growth that we saw just last year. And this higher check size with that steak, they also launched chicken shawarma. That sort of offset the flat foot traffic that they saw last quarter. Now, it's worth noting that they did cut their same-store sales guidance for the year. They now projected to between 3 to 4%. That's down from the initial projection that they had at the start of the year of same-store sales growth of 6 to 8%. And that younger consumer is where they're seeing pressure. He was very clear, Brett Schulman, on the call. He said that they don't want to overstate the challenges of the consumer, but take a look at the data. Young consumers are up against student loan repayment, consumer sentiment, inflationary pressures around them, healthcare costs, housing costs. And he said it's more that the younger cohort, that 25 to 35, they just don't have the same steam that they had last year, and that's certainly hitting their same-store sales growth.
Yeah, K-shaped economy, also a K-shaped stock market, and then you have Bitcoin, right? Ines, and Bitcoin off of some of the lows that we saw trading above $100,000 a coin, but still significantly off the record highs, down around 20%. Now, analysts have been pointing to something called whale selling as a catalyst for this slowdown. What is whale selling, and how is that contributing to the pullback that we're seeing in Bitcoin?
Yeah, this is long-term holders that hold a large amount of Bitcoin, and we've seen that there's been whale selling, which has put pressure on the market. The strategists are pointing to 400,000 Bitcoin that have been sold by long-term holders over the past month. That's according to 10x Research. You also have Compass Point, which pointed out that net sales from long-term holders has exceeded 1 million Bitcoin since June 30th. So that's a significant amount of Bitcoin to be selling into the market, but especially over the last month when we've seen so much volatility. The question is whether or not the market has capitulated or whether or not we could see a leg lower before going higher, because the strategists are still pointing to a bull market for Bitcoin. But some of the moves that the market has seen, that investors have seen over the last several sessions, have certainly been concerning, given that this is supposed to be a seasonally strong month for Bitcoin, and October was supposed to be a strong month. This was the first time that last October, this past month, was the first time that Bitcoin did not perform well since 2018. And in 2018, when it went down in October, it then subsequently went down about 37% in November. So certainly the fact that it did not do well last month does not bode so well for this month.
And I want to dig into that question, Ines, whether or not we've seen full capitulation, whether or not we could go lower, because it feels like we do have a lot of risks in the background from the shutdown and then more hawkish commentary from the Fed as well.
Yeah, that's right. So look, FundStrat's Sean Farrell was questioning just a couple of days ago whether or not you could see a bit of a leg lower before going higher. Compass Point is saying that they're thinking that 95,000 would be, or just above 95,000 would be the support, with Compass Point's Ed Engel basically saying that he doesn't really see any near-term catalysts yet. But there are catalysts which could send Bitcoin to the upside, and that would be the tailwind of liquidity. We've talked about this before. Liquidity is very important to Bitcoin, and the fact that the Treasury General Account has been sort of not been drawn on because of the government shutdown, that has not boded well for liquidity and Bitcoin. So if the government reopens soon, then that would be supposedly a tailwind for Bitcoin. If strategy were to go into the S&P 500, then perhaps that would also be a tailwind. Legislation in Congress that's also being looked at, that also would be a tailwind. So there are some catalysts that could send Bitcoin higher. The question is when those would come.
All right, a lot of question marks within this market. Ines, Brooke, Dan, thank you so much. Well, the results are in, and the financial capital of the world has officially elected Zohran Mamdani as its mayor. The mayor-elect will be the first ever Democratic socialist to lead the city. One of his most vocal critics on Wall Street, Bill Ackman, posting his congratulations following the win. And it's not just Ackman. Others on Wall Street are adapting to the new reality of a critic of capitalism running the city. On Tuesday, Citigroup CEO Jane Fraser told Bloomberg News they hope to work with the mayor-elect on making the city an even better place for both their people and clients to live and work. And last month, even JP Morgan CEO Jamie Dimon said he would put aside his skepticism of the Democratic Socialists to help him. The CEO of the biggest U.S. bank told Fortune's Most Powerful Woman conference that it's important for business leaders who are at odds with local officials to get involved and grow up. Well, coming up, Fed Governor Stephen Myron sits down with Yahoo Finance. Tune in at 11 a.m. Eastern for his take on the Fed's path forward. You don't want to miss it. Now time for some of today's trending tickers. We're watching Novo Nordisk, IBM, and Pinterest. First up, Novo Nordisk. The maker of Ozempic is cutting its growth expectations for its obesity and diabetes treatments as competition intensifies. It's the fourth time this year the company has trimmed its forecast amid lagging sales. The company also reported disappointing earnings for the third quarter. Novo is struggling to compete with Eli Lilly in the growing market for obesity medicines. It's now entered a bidding war with Pfizer for obesity startup Metsara as it looks to spark growth. Next up, IBM, the tech company planning to cut thousands of workers this quarter. The workforce reduction comes as IBM continues to shift the focus of its business to higher growth software and services. IBM shares have climbed this year on investor enthusiasm for its software business. The company employed about 270,000 workers as of the end of 2024. Finally, Pinterest. Shares slumping after the search platform gave a weaker than expected revenue outlook. It's a sign its advertising business may not be growing as quickly as expected, despite the upcoming holiday shopping season. Analysts at Rosenblatt also downgraded the stock to neutral from buy, citing AI concerns. The company just launched Pinterest Assistant last week, marketed as the first AI-powered visual-first collaborator for online shopping. Well, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, quick check on stock futures. We're a bit mixed at this point, pretty much trading flat. The Dow indicating a higher open, up just around 60 points. And the moves come as this week's tech sell-off has many wondering whether overvaluation concerns have finally hit a boiling point, and if we're now seeing the end of a bull market that's been chugging higher since April. For a deeper dive, let's bring in Carol Schleif, BMO Private Wealth Chief Market Strategist. Carol, there's been a lot going on the past few weeks. A lot of talk of a market bubble, whether we've hit the peak in the bull market. How concerned should investors be with this latest sell-off? Because a lot of strategists have also been telling us that a pullback was coming sooner than later.
Right. Well, a pullback would be normal, especially when you look at the energy that's been deployed coming off of those April lows. So some sort of a pullback in here would be natural. It's important, though, and the one thing that the markets have done very well all year is they might freak out a little bit in the short run, but they keep pulling back to what those fundamental threads, the underlying fundamentals are. And the underlying fundamentals remain pretty solid overarchingly. And we've seen that with tech company earnings, with other company earnings that were coming into the season so far, with something like 2/3 of the S&P having reported. We're talking double-digit bottom line earnings growth, which is pretty amazing for this far in the cycle. And so a pullback would be normal. The underlying fundamentals remain there. And actually, a pullback, I think, would be constructive in here because it allows markets to reset. They had kind of run ahead of things, as markets are wont to do.
So you're saying underlying fundamentals remain strong. How much can that offset the concentration risks within this market? Because we've seen the S&P hit 36 record highs, but just 6 stocks have driven half of those gains. So when you look at this pullback in relation to how concentrated this market is, does that indicate how much deeper the sell-off could potentially go?
It potentially, but you've also got, it's important to remember that those same companies are the ones driving the bulk of earnings and profitability. And you look at them in terms of, it's not like back in the late 90s. I know there's a lot of folks that want to conflate this with what happened in the late 90s, but it's a very different environment in terms of what's driven the earnings and driven the profitability are real companies generating real revenues out of real businesses. They're capacity constrained, which is part of why you've got the CapEx going on there. One of the things we are watching is how those are being funded, because you're seeing some of the funding happening in the debt markets now as opposed to cash flow. So yes, that concentration is there. But up until the past few weeks, we were seeing broadening out. There are other companies, other sectors that play into the build there, from in industrial manufacturing, materials. There are a number of different industries, too, that are generating double-digit earnings growth
Carol,
this season.
Does that worry you that these Mag 7 players are now funding a lot of their debt or tapping into the bond market to fund a lot of these endeavors?
Yeah, it's definitely something worth watching, and it's worth unwinding, because in my own head, we're trying to figure out, do you get so intertwined? And I think we're very early in that process because they had very strong balance sheets. They're trying to lever responsibly, if you will. They had almost underutilized balance sheets in a lot of cases. But the one thing we want to make sure is that we don't have a concentrated list of companies and funders that become so intertwined that they all become too big to fail. That's one of the things we're watching pretty carefully as well.
And given all the record highs that we've seen, sometimes folks tell us that, when you have some sort of a pullback and you have a little bit of volatility, it's good for investors because you can get in at cheaper prices. So are you advocating to buy the dip at this point, or would you wait on the sidelines a bit more?
I think it depends on client by client where they're at. We call it portfolio hygiene, and we've recommended continuing to rebalance through the year. It's also important to remember from a diversification standpoint globally that the U.S. markets, while they've done really well, have underperformed a lot of global markets. And so being globally diversified and continually rebalancing within that makes some sense. But for clients who have maybe year-end bonuses or early in the year bonuses, having a pullback in order to be able to deploy some of that cash makes sense. For other clients where they've got significant gains year to date and wanting to trim back and rebalance some of that into there, that makes some sense too. It's also great for those clients with appreciated securities to be able to do some year-end gifting to their favorite charities with those appreciated securities.
And finally, Carol, we have a K-shaped stock market, and it's coinciding with a K-shaped economy, with those higher income consumers driving a lot of the resilience that we've seen within the economy. How concerned are you of the link between the stock market gains to that higher income consumer, and how that could potentially bleed through to some of the economic growth that we've been enjoying over the past few quarters?
Yeah, I think that as well, the K-shaped consumer and the K-shaped companies in the economy is definitely worth watching, because you do, as your earlier segments talked about with the consumer companies, you're definitely seeing strain on the lower part of that K, and demographically as well. And so it bears watching because it impacts a lot of the consumer companies. And you've seen it in some of the earnings reports where you've got a lot of frontline consumer companies that understand how how fraught consumers are with the higher level of prices they're paying now versus 5 or 6 years ago. And you touched on this. Autos are expensive, homes are expensive, education, there's just a lot of things going in, making it tough for that lower side. And they're staying supremely value conscious, but they're also making choices in terms of, if they may not travel, as extensively, but they'll do staycations close to home. They may not spend up on certain things, but they'll divert someplace else. But the higher end consumer, as long as housing values and stock market, their spending tends to be much more tied to things like that, as opposed to employment concerns or things like that. And even with a pullback in here, we suspect that when you look at overall net income and values that top tier owns, it's grown substantially in the last few years, not just in the US, but globally as well.
And we just heard from Kava at McDonald's this morning, both warning about the pressure on the lower income consumer. But Carol, thank you so much for your insights. Appreciate it.
Thank you.
Coming up on Yahoo Finance opening bid, our own executive editor Brian Sazi joins us now. And Brian, it seems like with the stock market, at least, we have a bit of a recovery somewhat from that sell-off yesterday.
I feel you, Allie, but I'm going to lean into the gloom and doom we've been seeing in the markets the past 2 days, because why not? AMD, great quarter, stock gets hit, Palantir sell-off continuing a little bit. In addition, I caught up with Bank of America CEO Brian Moynihan, big investor day for that company. We'll have those comments shortly.
All right, very excited. But that does it for Morning Brief. Much more ahead on Yahoo Finance. Stay tuned.